Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a audio and screen check in YouTube and the Bookmap Discord TraderLab community? Okay, guys, can I get a check in Discord and YouTube? Good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. Having a little technical challenge here today, so I hope everything's going to run smooth. Some of the levels in the data might be off. So as we go along in the Bookmap TraderLab, if things are a little bit out of whack, let me know. Not necessarily to the tick, but if it's really out, I need to know. Been working on this a few hours, trying to get it straightened out, and there was rhythmic problems this morning, which kind of affected other products here that I use to generate levels, just so you know. So please bear with if in case things are a little bit strange. Welcome to the Trader Lab, everyone. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, notwithstanding technical issues which occasionally happen that are outside of our control. And this stream is about integrating bookmap order flow tools using auction market theory and the volume profile in order to structure trades. This stream is based on developing trading plans. In other words, vetting and only integrating or interacting with the market participants when you have a statistical edge. Otherwise, it's pretty much random and gambling. Now, if we accept that the market is random, and if we use random inputs or indicators, and it's kind of a smorgasbord of which indicators align at which time, quite often that results in trader failure. Why might that happen? Well, if you don't have a process that is consistent or anchored, you can't measure it. If you can't measure it, you have no idea of knowing if you actually have an edge other than the random outcomes of any interaction. So if we accept the market as random and we operate without a statistical edge, we will win at times, because you can throw a dart at the board or throw the dice, if you will, and win. But the edge goes to those who have a statistical edge, in other words, and by playing the games like the casinos do that only have statistical edge, over time they extract the dollars from the gamblers. It works really well in the casino or gaming business. And in reality, since casinos are in a random environment like ours, random cards come out of the deck, gamblers play the cards randomly. We're in the same environment, except the casinos have anchored inputs and only play games that favor the casino or have an edge. That's the business of trading. Now, you may not, think that's what it is, but that is ultimately what gaming is, and that is our model. So if we can take a successful model and extract what works and replicate it in the trading business, because in trading, it's very much the same thing, but our games are trades or setups. So if we can approach it this way, and as opposed to being emotionally attached to the outcome of every individual interaction, train ourselves to see this as a business. Losses are cost of production and overhead, in my opinion. And the casinos see it the same way. If you run a business, you certainly have expenses. I mean, nobody likes to write out a check for a bill, but in order to generate an edge, you do need to pay the gamblers. And that is the nature of gaming, and that is the basis of what the TraderLab is built on, helping you understand the business. Also, there's PDFs of structured trades that you can reverse engineer, see if you can create an edge with them. And then there's the TraderLab community, where we leverage our collective experience. All level of traders in there and many diverse approaches to trading. There's not one way to trade, of course, but methodology as far as process and edge is what trading is about. Doesn't matter how you get it. It's just a matter, is it consistent and is it measurable? General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. If we get into real time, we'll talk about it. The idea of this stream is to help you see how the market unfolds and how the auction process might at times give us insight as far as participant intent. Then it's using an order flow tool like Bookmap to drill down into more microstructure to see order flow, icebergs, stops, the limit order book, how it's manipulated, algorithmic behavior, things of this nature, and price response or participant response to these phenomena. And then by codifying these behaviors over time, you may observe things that repeat. And then if you put this together, you may be able to extract the statistical edge. And there's a lot of examples of this in TraderLab. There's 60 PDFs you can download of these structured trades that can help you get a sense of what a process or methodology might be like. You don't have to reinvent the wheel. And then there's the TraderLab community, which shares and leverages. And the other thing is, not only do you have 60 PDFs of structured trades you can download and reverse engineer, there's also a library of webinars related to this process that really shows the same thing over and over again as far as how the market works. So this is the RTH Open. Hopefully, my levels are correct. One never knows, especially after this morning. Hold on a second here. Oh, that's nice. Okay. So this is the RTH Open. Right on the open, this block of liquidity jumps in. Now, there's no way to know this is going to happen. Remember, random. Now, we are opening lower inside of yesterday's range, but remember this, and grab your pen and paper, take a couple of notes, because this is always what kind of blows my mind a little bit. It is so simple, yet it is so consistent. And that is that the market goes up to go down, and the market goes down to go up. The market goes up to go down, the market goes down to go up. So yesterday the market went up, and then the market goes down to take out the buyers that are in there, and it washes them out. And you'll notice we had a pretty good washout this morning. Then the market goes down to go up. What is this all about? Well, when the market is stacking, if you will, and is trending up like we have, and we have lows, recent lows, under those lows are sell stops. If we get into that area, then it accelerates down and brings new sellers, like this morning. Then if we turn around, those sellers become buyers, and then we can return to balance. So balance is where the high volume is. Now I'm going to try to roll along here. 64, this is an attractor. So this is the highest volume over the last, since we had the big leg up, and I can't see the chart at the moment. You guys, it's probably about 5 days or so ago, maybe. And so this is retail in the intermediate time frame. I think of this as a retail price. High volume is retail. Well, the market is fractal. So we anticipate the market, if we open outside, that we will come back here. Okay? So I'm thinking longs. Now, that's what I'm thinking. That's the context. However, we open lower in range. So now what? Who takes the ball? Now, we have some statistics, and this is always interesting, and you have to vet these for yourself, but there's an 83% probability we'll get to the overnight volume point of control. Now, what is a volume point of control? It's a high volume area. Let's see if I can find it here. Guys, where is the overnight volume point of control? Might be covered up here. How about a statistic, guys? Overnight volume point of control? Anybody? It's about 55-ish, maybe. It's probably right in here. Is that right, guys? How about where is that? TraderLab? 55.25. Okay. So this we hit right on the open. Then there's the overnight mid, an 83% probability. It's up there. There's the first hour high, a 69% probability, first hour's high. The previous point of control, which is a 70% probability. Let me just, there. We have a 70% probability getting here. And let's see, yesterday's settlement is up here, which is around 70-ish. Let me just see where that is, 72. So there's a 72% probability of getting here. We have a 70% probability of getting here. Looks like we just hit the overnight mid. And this is important, 83% probability. And everybody's clueless. So clueless in the sense of, which way are we going to go? So we still don't know. By the way, yesterday's low. Let me just see if I have a stat for that. 53%. So lower, the probability is skewed to the upside. And that's as good as statistics are going to be. So we know we have a skew and we have a traction to this because this is yesterday's retail price. And if we leave the retail price, we can come back to it. We just, why wouldn't we just open here and go up? Well, the market's long. What does the market do? The market goes up to go down, and then it goes down to go up. So this is part of the joy of trading. It's random. Write that down. It is random. And can we predict any of this? No, we cannot. All we can do, based on having a structured trade plan, is to attempt to get an alignment. So RTH open, liquidity comes in the book. This is like having a sniper behind a bush. Who knows? And I'm looking for longs. But I'm also conscious the market is long. So if I see sellers, then I would want to get on the short side to push them out. And, whether or not that's going to happen, that's always part of the joy. So let's look. So this is a developing volume point of control. When this comes in and I see this, now I cannot react to this very quickly, because I'm still in the what's going on mode. It's just the reality of it. How quick can you respond? This is called developing volume point of control, and it is microstructure. And basically what this is showing, well, hold on a second. Okay. Basically what it's showing is the volume here is too high. This is now retail. This is material. Nothing you can do with this. And here they come in again. This is pressure. Okay. This is showing me they pulled, and now they're adding here. And you can see them adding. This is pressure. So this is a situation where I want to get short. VPOC migration. Now, and you see this coming down. So this is the pressure in the book. So this tells us that the market is going to potentially go lower. So how do we get into this? Well, this is where you'd have to get in. And I can tell you right here, not so much. Very hard. You'd have to be, you're in here 11 seconds. Very hard to execute. Okay. You can execute if you have experience with this, but it's the last place I always say that developing traders should execute, but they should try to read it because it's the speed that makes it so difficult. So this is called developing volume point of control. This is too high. I'm going to label this. I call this a variable high volume node. All it is what's something called VPOC migration. And what the volume point of control is, it just measures volume and price. And when you have high volume at a price, it's going to mark it. It's going to move. Now we moved away from this. So that is saying too high because this is the retail price. It's like you go to a store and the price is still too high. So the shoppers leave the store. Now, this is the new retail price. This is too high. I think of these as like resistance. So what is this? So right here, whatever happens here is going to generate the next leg. We break low. So this is like retail price, sellers, pullback. This is a short in the TraderLab. This would be the first short based on structured trades, assuming you can't take what was up there, and let's assume very few of us can. So this sets up your first short in TraderLab. So off you go. Let's watch. Return to VPOC. Right now, I haven't seen any of this, guys. I've been in the nightmare state with data problems and all kinds of things. So this is a test. So this is the retail price. Now it can do a couple of things. It can push through and start rotating, or test, and if it's too high, and this is also your VWAP at the time, and this is the location of the volume point, developing volume point of control. This is also a potential short. So in TraderLab, you have this as a short, and you have this as a short. And now here, what we're going to look at here, VPOC migration. Same as that. We're going to label this variable high volume node. This is process. Now, the thing with process is it's kind of, if you want to think about it, methodology, if you will. And the whole idea of the auction is to try to keep track of the perception of value. And if the participants, remember, won't pay this, they'll come back to the store where it was too high and go, is it still too high? Yeah, I'm not paying that. And we run out of our buyers. Down we go. So this now is too high. Now this is the new retail price. Now there's a couple things that can happen. We can bounce off it, come back and check the VWAP or back here, or we just rotate and push off. Let's see. Variable high volume node. Now, let's mark this. Variable high volume node. This is a problem. And let me explain what it says. It says at the moment, this price. So right here, when we cross above, that is saying potentially too low. VWAP, we have absorption here. This is the mid right here, and variable high volume node. I'm not paying that. Yeah, but it's on sale. Maybe this is too low. Where's the stops? VWAP mid. What was too high last time? Here. Let's see. What is this? Too low. What is this? Too high. Volume here. What is this? Let's watch. Let's just keep rocking with this. Variable high volume node. Now, I interpret this as language. So the auction is a language. So I don't use indicators because this is indicating what participants think of pricing or value. If this is too low, then, and this was too high, and it happens to be the mid, look at that. This is a potential short. Or we blow right through here, and that's life in the fast lane. This here now becomes too low, and this is too high. And right here, it's this could be a problem. Because if this is too low, this might be too low, and then we can squeeze out. So what happens? This shifts up. I have buyers here. I have exhaustion there. I have no buyer above this seller. Now, I'm not discussing triggers. I'm giving you a broad stroke. This is support. If I take this short or this short, I'm scaling here. Why? Too low, too low. There's my scale. So, and my stop goes here. And then whatever happens, happens. Too high. Where do I pull back? VWAP. VPOC is below me. This is retail. So if this is too high, This is too high. This is too low. Clueless. Cross back above. This is resistance. This is now retail. Right here, I need to get below this and this to go lower. If not, I can come back around and squeeze everybody. Let's see what it does. Watch the yellow, follow the yellow brick road. Too high. Watch. Now, I typically are moving these around, but I'm just giving you the broad stroke, and I don't want to waste time. You know, I want you to kind of see method, process. So this is kind of how I do it, and I'm not saying this is good, bad, or indifferent. I just know it works because the indicators look backwards and may or may not be in alignment. So if this is too high, and now the price is here, if I don't get above here, I'm still heading south. And it can do anything, right? What do we know? We're below mid, we're below VWAP, and the volume or the retail price with the shoppers where the volume is moving lower. All this is suggesting south of the border. And where are the stops? Under yesterday's low. So right here, it's still, you know, looking good, Lewis. So let's look at this thing. Wow. Boy, you guys must have had a good time this morning. If you were short. Yesterday's low. What's under yesterday's low? Stop. So let's watch this thing. The stops are here under the low. And I think we took out 2 days of low. Is that correct? Let me see if I can see a chart here, guys. Sorry, I can't look at things. Yeah, we did. Oh, that's right. We had this double RTH bottom at 41.50. Oh, that was so juicy. Huh. Boy, wish I was able to trade that short. So 53.35. I'm sorry. Well, first of all, 41-ish was the double bottom. So we know there's going to be a lot of stops piled there. However, in the higher time frame, the intermediate time frame, and these are not strong structures down here, we have a structure called the microcomposite low volume node around 35. Let me see where it is. 35, I think. 35, 36, maybe. So in here, does anybody have a microcomposite low volume node? I do not have this stuff marked. So the market comes down here, and now this is a change in behavior. You see this? This is the first up move here. So let's try to take a look at this thing. Now, I can't pick the bottom of anything. It's just not my skill. So I don't try. But right here, I mean, the market comes down. Why wouldn't it just keep going, right? So buyer, seller. So this just looks like a counter rotation up here. Now, here's something else to look at. Icebergs, see this resting liquidity? Icebergs are buying on the way down. Now, the thing about an iceberg buying, they are in a different business than we are. We're the little minnows that are swimming with the sharks. And an iceberg's just more sophisticated than us. You know, they're special orders, they pay extra, they get ahead in the queue, all kinds of nice stuff. But they're limits. So these are limit buyers, okay? And we can see them. And then we can see the execution. These are sell stops coming out. So the stops are still coming out down here. Looks like the end of the planet. So I have no idea where it might change. So, you know, if you're sitting short, you'd just be managing your trade, and you have a vetted trade plan. You just have a process that would take you out of the trade at some point. Now, with this kind of steep sell-off, it'd be pretty neat trade, I think, and you would get taken out at some point. But let's just try to see the reversal. So there's volume here, and there's nothing, no way to know. At least if you know, let me know, because I don't know. So let's see if we can change the behavior. And I'll look up here for questions if you have them. Thanks for your patience. It's just been really a hectic morning with the data, and IRT threw a fit over the whole thing. And I can't blame IRT for that. I think bad data came in, all kinds of stuff was going on with Rhythmic. It was really a Rhythmic issue. It's nothing to do with Bookmap or IRT or anything else. So if you guys were having issues this morning, that happens. Part of the joy. So here we have our sellers. We have icebergs. We see liquidity in the book. Here's a change in behavior. This is the first counter rotation that's significant. Our sellers come back in, take a shot. No way to know. I see absorption here. Okay. And I'm seeing buyers. Any selling in here is being absorbed on the way up. So that was very interesting. Okay. I would not be able to figure this out until hindsight. So I just want you to know I can't figure it out. I know that this is the last place where the sellers took a shot. You can see this. You see the sellers. Right here, it looks like it's going to zero. Buyers come back again. So we have our buyers initiated here. Sellers got stuck here. They were absorbed by the passive side. This is how Bookmap can help you. You cannot tell, at least I can't. When I look at, these are delta, all right? So sellers, buyers, right? So, and I filter my bubbles or delta because I don't want to see all of them. I want to see the higher volume because if I see buyers, and buyers are a combination of initiative orders, market orders, buying, and buy stops that become market orders. So delta is imperfect, but I see the buyers here. Now, if I have more initiative buyers above here, the market will keep going. But always on the other side of the market, you have passive sellers. We can't see them. They are here in the book, but we can't see them other than they're in the order book. But if the buyers are here and they stop moving the boat forward, then you can make an assumption that the buyers were absorbed by the passive side. And then if you don't get more aggressive buyers, then these guys, whoever they are might get stuck. And then they get stuck. The sellers take over here. The buyers are here. So you have a buyer here, a buyer here. Sellers here. Consider this guy under the bus. Consider this the last shot on goal. Consider this the sellers that took over. And you don't know, naturally, until you see these buyers not getting any traction. Then there's the sellers again. Sellers. So now, so these guys got stuck. These buyers got stuck. These sellers are having a party. And then what happens to them? These guys are stuck. They have to take this out. And this is kind of the last hurrah. So now you have these sellers in the leg. Buyers come in here. Now, for these guys to get run over, we have to go lower. If we don't go lower, then these sellers are under the bus, opposite of what you saw up on top. And these guys potentially are under the bus and anybody down here. So what happens here? Buyer here. Buyers above the sellers. Rotate down. These guys are stuck. Buyers, 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 buyers. Sellers take a shot. Buyers. Absorption. These sellers are now absorbed. That's a buyer. Acceleration up. So now the shorts are in trouble. Now, let's look. Come back to VWAP. Now, how might you get long? Let's look for long. See if we can find one. You come back in yesterday's range. That's a warning Will Robinson situation. And once you cross the VWAP in the mid, now I can understand you might take a short here. This is the mid. However, where are we? We're inside of yesterday's range. What else do we know? The higher time frame is bullish. What else do we know? FOMC tomorrow. What does that mean if you were long? You would exit potentially today. that also sets off the sell stops, which gets the market short, blows out the weak longs, and puts us back in the go north situation. Remember, top of the stream. Let me pause for a moment and see if you guys have any questions. Thanks for your patience. Still having some problems here. Come on. And please give a thumb up in YouTube if you're finding this useful. I'm getting a question. Thanks first. Yeah. To me, I want to be long. The first trade was not a long. I come in because my orientation is long, and then I'm looking to see if because after what happened yesterday, that we basically had a double bottom yesterday, it's a weak structure. But I have to go with what I think is the higher time frame and where are we opening. The naked volume point of control has a 70. The statistics favor the long side. That's basically it. So I come in looking long, I see short, I go short. And then I want to go short to go long. It's just a matter of priorities. So I go with the priority. I have nothing else I can do about it, you know. And the fact that it came down here is a totally surprise to me, except for the stops. So I'm looking long, but looking long is my priority. It doesn't mean I don't get short to get these guys out, because to go up, we need to go down. And if we go down, then we go up. So that's the way I was looking at it. So when I talk about my dominant side is the long side, the short side is the opportunity to get long or to blow out the longs. You see, take the short to get the longs out. Does that make sense? Well, that is it. Squeeze to a line. It's sort of a priority of inputs first. It's for me, the short-term dynamic is one piece of it as a day trader. However, I never want to lose sight of what the dominant side is, which was the long side. That hasn't gone away at all. And let's remember what we're actually trading. What are we trading? Now, this kind of blows minds. We're trading something called mean reversion. So in a high time frame, this is the mean. This is yesterday's RTH. If we're below these and we go south of the border, then the probability is to come back here or not, you know. And then we look at our statistics. Well, overnight mid is one of them, and then this is the mean. 70% probability we get here. And to take out the first hour's high, which is at 9:30 Central Time, is 69%. Past performance not indicative of future results. So everything is telling me to get long. So I'm thinking long. So the short is to get long for mean reversion back here. Does that make sense? So I have to think in fractals or multiple time frames. And this is challenging because we get myopic. Trading, at least the way I experience it, at least I've always thought of it, is multidimensional, and it's kind of like a chess game, a vertical chess game. So we play in different time frames or fractals, but they're like Russian dolls. They're overlaid on each other. So that's kind of, you know, what it is. This is the IB high, which is right here. I think I'm just going to pick up from the IB and leave the rest of it. We have other longs. I'm not going to spend time. I want to get to real time today, something different. And remember, there's a library of webinars. You could see all these structured trades over and over again in the Bookmap Discord TraderLab chat. So this is the IB. We break the IB, we pull back here. This sets up the IB. Let me just make sure I've got this right. Yeah, I do. The IB continuation trade. Break the IB, pull back, sellers here. We had sellers here, got stuck. They were absorbed. Sellers try again here. These buyers are on the hook. You see a buyer here. So I've got buyers in the area. This is a structured trade. This is a long. And where are we going to try to go? Overnight mid. And scaling and getting risk neutral. So let's look at this. Overnight mid. So the target, remember statistically, overnight mid, and correct me if these levels aren't correct, TraderLab, 83% probability. So this is the IB continuation trade. So this is a long from here to here. And I always give it a couple ticks, but that's the trade. And then going for this. This is the next target. So here's how this would work. You would take your long here. This is your target. You'd be scaled. You'd have a few burgers in the bucket, and then you're going for this. Let's watch. Now, either you manage your trade, one part of the process, or your stops at break even. Market comes down under here, you get taken out. It's just one trade. Now, comes back here, and I think I narrated this. I don't remember. I think I did. We have absorption. We pick the stops under here. This is a low volume node. Somebody mentioned this in TraderLab, 53.54. This is an outside edge. This is still a long. And let me explain what's going on here. When we first come up, we're looking for a continuation trade, which is what that is. When we come back down and we come under, now, and this may make you a little crazy, we pull outside, this becomes mean reversion in a fractal. We are doing this in multiple time frames. Coming back here is also mean reversion in a higher time frame. So what we're looking for is outside in, continue. That's what this is right here. So this is the first trade I got to take today. Very excited about that. Absorption, outside edge. Come across. This now is like a micro VPOC. Break above it. Pull back. And this, I got long here. It's kind of a terrible location, but I got long here. I got scaled, and I'm looking for it to, again, to go to the target, which is this. So not so much. So I got scaled, I got taken out, and that was it. That's my one trade for the day, and that's that. Very excited, and just adds to my general feeling of wellness with all the technical problems this morning. But that's that. So now there's no structured trade here. There is a counter trend trade, and this is up to the individual. Let me show it to you. And it's called the IB failure, but it's a limited opportunity. It's not a trade I would take, but doesn't mean you can't, because I'm still going. I'm still looking at this. So in a short time frame, this can become a short to here and here. That's it for this. And what this sets up is mean reversion in the short time frame. So let's think of this without getting too nutty. This is mean reversion in a high time frame. This. If I fall inside of this, the IB high, which is what this is, this sets up something called the IB failure, which is a structured trade, but it's counter trend. This is where you have to vet it and know if it fits your plan. So if you take this trade short, you're looking for the stops at VWAP, and this is the VPOC, this is the mean. So the short is to here. And then if it gets under there, it'll rotate, and then you're looking for it to come lower. Maybe down here someplace. So that's also mean reversion, but counter trend. The long coming up is with the trend. The short here is counter trend, but in a developing daily time frame, and it's a structured trade called the IB failure. Now, here's, as we say, the rub. The rub is, what time frame are you trading in? And in this scenario, is this a trade you would take? In other words, do you have an edge? And this is kind of a thing where each individual trader decides how aggressive they want to be, and kind of what time frame they're operating in. For me, it doesn't matter what I do. I'm just saying is I like to trade with the trend because I don't need a lot of trades. I just want the trades to pay me. I don't need action. Been there, done that. I want to avoid risk that doesn't give me a high probability. And I prefer just to take the trades where I have the best edge. My need to be active, it's just personal again. I'm going on 45 years doing this. So my need, for activity or something to do is not high, especially when it comes to trading. My need is to get the statistics lopsided on my side. So while this is a viable structured trade in the TraderLab, since it's counter trend, it's not the same as the market in balance. Now, remember, where's the conflict in all this? I'm trying to go for this. So what I would like to see, and it's not a recommendation, is that this comes down so I can again get long and go for my probabilities. And this one's got 70%. And of course, past performance not indicative of results. You got to vet it and clueless. Why? It doesn't have to ever go there. It could go there tomorrow or never, So that's part of trading. So I would not take the short. I know traders in TraderLab might take the short. And both are correct if it's part of a trade plan. There's not a right or wrong because the outcome is random. What there is knowing where your edge lies, and then it's up to the individual. Are you trading mechanically, or do you think maybe this is a trade not to take and better to try to use it if you get a deep counter rotation for alignment to come back here to the IB? If I was able to get long, my target is the IB for a scale, and then I'd be going here. So that hasn't changed for me in the time frames I traded. And I'm trying to make a point here is that there's nothing wrong with getting short here. I mean, it's not a right or wrong, it's trade plan. The right or wrong doesn't exist. The randomness is what exists. So this has as good a chance, 50-50, of getting here, which is the target, primary target, as it does coming above here and going here at this time. 70% probability to go here. You say, how do you reconcile that? So I'm just giving you the dilemma of the randomness. So for me, it's the long only. Are you guys tracking? Is this making some sense? JT, I don't remember what I referred to, the strong structure. Can you give me a little more clarity on that? Also in TraderLab, are you guys on the IBF? Just curious. And if you're on it, you're on it. But I'd like to know what kind of how you see the trade. And we don't have to talk about it now because I'm in the stream. But this is such an interesting part of the randomness of trading. You could take the IBF and it could be the trade of the century. I mean, we have. And then a lot of those webinars that I've done, and if you look at the IBF, it's a very meaty, good trade. But, and here's the but. We're in yesterday's range. I don't know where the mid went. It's around here someplace. Maybe it fell off my chart. Guys, where is the mid? Since my levels are not working right here. I have VWAP, VPOC. Oh, okay. Yeah, JT. Guys, where's the mid? 48.50. I just found it somewhere. Okay, it's covered up. 48.50 is also the mid. Man, it's not showing here. that right? 48, yeah, 48 half. Okay. Hmm. Life in the fast lane. Okay. So, yeah, why is it a weak low? A double bottom is weak because they're exhaustive structures. It just means we ran out of sellers and there's stops. When you come down to a level that is significant and you don't get into it, that makes it weaker. It doesn't make it stronger. The more times you test the level, the weaker it is, not the stronger. So a double bottom, double top, they get broken. Triple top, triple bottom, weaker. It's like knocking on the door, you know, and there's going to be a lot of stops. In other words, anybody who got long yesterday for that nice rally has their stops under yesterday's low. Well, the previous day's low was also there. So there's a boatload of stops. If the market comes down again, it's going to, when it gets into that, it'll accelerate. I hope that explains it. Oh, thanks, Repeat. Thanks, Trader did. Anyway, JT, I hope that clarifies it for you. How we doing in YouTube? Kind of, you know, now we're going into, kind of volume drops off. The IBF is actually a pretty good trade for it's a counter rotation setup and a mean reversion, which is here. But the conflict of this whole thing is the trend is up. So I really think it's a questionable trade. But it doesn't mean you can't take it. You just got to do your job. What's your job? Get risk neutral. And then targeting. That's basically it. That's all there is to any one trade because they're all random. Interesting, isn't it? If you're interested in these, and today's just what it is, this is trading. It's part of the joy. It is what it is. So we'll watch this one. Here's a way to look at this in microstructure. Let me show you this. Try to show you. Market breaks down. Here's micro high volume. I'm going to take some of this noise off of here for a moment, just to make it a little cleaner. I'm going to try drawing a couple little boxes for you. So this is a chop is a consolidation. You break away. The volume is here. Notice this comes in the book. Pressure. Let's just watch the pieces. Chop here. Buyer takes a shot. Let me try to do this. I'm going to use that one. There's your chop. There's your seller. Here's your pullback to the volume. Let's keep looking. Now we have another one here. Looks like that IBF is going to pay somebody. Look at that. Short structures. So break, test, short. Here's the volume. Break, test, short. I'm just showing you some ideas. So if you are going to get short for the IBF, when you break below and you pull back, this is the volume. There's your resistance. It breaks. Watch. Now we have the micro volume here. Buyers are trapped here. You see your seller. Buyer tries here. You get your seller up here. Down. Buyer tries here. Seller hits it again. These buyers now are under the bus. This here, check this. Sellers. Where do we come back? To this volume in here. This is what's called microstructure. Too high. Break. Let's see what it does here. Where are we anyway? Are you guys tracking? You see the structure? Selling. This volume in here. Too high. All of this is in alignment with this. So too high. Too high. Micro here. Still too high. Sellers. Too high. Too high. IBF, you know, if you took it here, right? Mean reversion. Anybody on the IBF and TraderLab, guys? Jamie in YouTube. So you're using the IBF as your number one strategy. So you're a counter trend kind of guy in YouTube. Thumb up in YouTube, by the way, if you're finding this interesting. These are structured trades, and this is available to everyone in the Bookmap Discord TraderLab chat. If you're in YouTube, there's a link down there. You can download these 60 PDFs, and they're structured trades, and you'll see this in there. It's called the IBF. We have a couple of them, actually. We have what's called the IB continuation trade, which I narrated. That one got scaled. I think there was two of them. Both got scaled. I think one, both, yeah. And this, and the IBF is, so there's the long continuation off of here. And then if we break below it, it's a short mean reversion, which is back here. How are we doing in Discord? Do you guys take the IBF? In the Bookmap Discord TraderLab? Oh, you did, Ra? Okay, good for you. Again, this is counter trend. So this is where your trade plan comes in. And what this is mean reversion. So let's look at this in a fractal. This is mean reversion's return to the high volume. In the higher time frame, mean reversion is returning to the high volume. So what are we doing? I know it's maddening, isn't it? In the developing time frame, this is a short. In the higher time frame, it's a long. Not from here. You see? So you could be trading as long as you're aware of where things are located, and more importantly, since we're talking the auction, what created them. This was the retail price yesterday, highest volume. This in the developing, now this moves around, right? So this is reflecting the current high volume. Mean reversion, high volume is the mean. So the IBF is a mean reversion trade, outside in, opposite, counter trend. And basically the idea of this trade is to clean out the longs. Where do they keep their stops? VWAP, VPOC, and mid. All that's right here. So the longs, who don't understand how the market works primarily, are going to have their stops piled together. What does the market tend to do? Same thing it did at yesterday's low. Take out the stops. And then if we exhaust, we can come back. So not a recommendation. So what's the deal here? Here's the deal. And by the way, VWAP, we get mechanical VWAP buyers. By the way, they might be right. I mean, remember, the gamblers walk out with cash. So there's our absorption. There's sell stops, and there's a buy iceberg. This might be the low of the move, right? If I put this trade on the short, I have to get scaled at the first obstacle, which is this. Why would I scale here, you ask? Because I anticipate retail behavior, which is the mechanical buyers. And remember, the gamblers get paid. Maybe they're right. I don't know. So if I'm short from out in here, this is my target to scale, a couple ticks ahead. Then I anticipate retail buying. If they keep going, then I'll get taken out of my short, scratch the trade, or take a burger out of it. If we get the buying here and we can't get through here, then these guys who have their stops under here and under here will get taken out. Then we can come further outside or whatever. So we have to see how this plays out. But that's the structure of the IBF. And the thing about it is, here's an important thing to think about in structured trades and trading the auction. The auction does not care about the range. We do. If this VWAP and VPOC were out here someplace, it's the same structured trade. It's the range, it's the behavior, I should say. The range is what we need to justify risk reward, and it's all process. So the auction is generic. Range is range, and the auction behaves the same way. If you look at those webinars and the library of webinars that I've recorded that are available exclusively to Bookmap Discord TraderLab participants, you will see this process in all different ranges and conditions. You'll see when you can get 30, 40 points out of this trade which is going from here to here, because this is located someplace else. That's the point I want to make. Once you understand market mechanics, remember what the stream is about. Market mechanics, how the market works, why it does what it does, and how you might get in alignment with it. The range is a variable. And then it's a matter of having a structured, vetted trade plan. Do you have enough range to get risk neutral? And that's from your entry to here, because that's where we anticipate a response from the retail traders and the counter rotation. Now, here's what's going to happen. They got it. They're right. They squeeze everybody out. Remember, this is where we're headed. Maybe. Not a recommendation. Or their stops are here and their stops under here. And these buyers, if they don't get love, then we rotate down and take them out and take this out. So this is the trade, and nobody knows the outcome. So the goal in TraderLab, if you take this trade, is to get risk neutral, and then you see where the chips, as they say, the chips fall where they may. That's a structured trade in TraderLab. And I already gave you my idea about it, is that I wouldn't necessarily be taking it. What I would be doing with it, and it doesn't matter if it does its thing, because I want it to do its thing. So I can get long and come back to this. See that? Different ways to trade. It's just time frame based. This is called VPOC migration. This right here is a key event. Either if we push off from here, then the shorts are going to get squeezed. If this becomes too high, we're coming back here. Let's watch it. This is a key moment, if you will. Let's see. Again, this is the new retail price. What do the shoppers tend to do? If it's too high, they're going to come back and check this. Is this really too low? If this is really too low, and then we cross back above here, we're going to squeeze out the shorts. That's auction. Let's see what it does. Questions? Dinosaur person, where would I be looking to get long? I can't tell you because I want to see this. Here's the mid. So I want to see the stops come out. You see, so if it came here, I wouldn't be doing anything here. Because there's stops under here. So I know there's stops here, and I don't mechanically do anything. What I would be looking for is where's the outside edge? Well, it's down here. And there's micro high volume here. So this is like what the market tends to do is at auctions, so these rotations, and then there's high volume. That's what this represents. This is a retail price that we left. This is too low. So possibly if I come outside into these stops, maybe, I don't know, and I push under the mid for the stops, because that's what retail traders do. Write this down, everybody. Think like a retail trader. Don't act like one. If we understand retail trader behavior, then we understand they buy the mid, they buy the VWAP, They keep their stops under the VWAP. They keep their stops under the mid. If this is the retail price, how does shopping tend to work? Well, if this is retail, where's on sale? And their stops, that is sellers. So that will create some momentum. Then I know this might be too low, and it doesn't have to be. This is part of the joy. And then if I come outside, I'd be looking, and this is not a recommendation, for a long to come back here and then come to the IB high and squeeze it and then look for that. That would be my idea, not a recommendation, because I have no idea. Now, here's the other piece. These guys might be right. If we cross above here and over the IB high, then we're going to continue potentially higher without me. That's fine. We'll see. And there's other ways to get into a long, but right now this thing is not resolved. We got a selling iceberg here. We had buyers here get trapped. This is our current resistance, variable high volume node, outside edge. The short was from the IB high. I've got liquidity being added in the book. What might that do? Order flow. Too high, pressure, selling iceberg, stops, retail, stops, outside or not. That is the IBF. Repeat, I would not buy the pointer control. You can. Let me tell you why. If you're talking about this, because it's the mid and there's stops. Now, the thing right here is if we push through, then that's that, But, and these guys look like they're getting paid. That is part of it. If we don't cross above here and this liquidity stays, now if they pull or flip, that can change everything. And that's a different conversation as far as how you might integrate order flow. In other words, if this pulls, what does that tell you? And then what do you do about it? Now, the thing about liquidity, I always say it's like standing on a banana peel because it's not rigid. This could just be here to create pressure to get the rotation so an iceberg can buy at a better price. Once they fill, these guys could pull or flip it around and push. There's all kinds of stuff that goes on in here. And as retail traders, we really don't know the intent. I do know we have 431 sellers here. And I know that these buyers were absorbed right here. That's our absorption detector. So we have to see really what happens right here. More buyers. So let's watch. Now, I certainly can't predict because I don't have, what do they say, the crystal ball. I have a magic 8 ball, but not a crystal ball. So let's watch. The thing I know is, remember, for me, I don't take the short. I might not have a long. Not yet. So we'll see what happens. See, the thing about this is you could take the short. You just have to be scaled here. That's all. And then if it comes back above your entry, you'd scratch, Well, up to you. And this is the last level that was too high. So we know this is micro high volume, and we'll look at this also, see what it does. This is still in the book. We'll see. Now, this is all algorithmic. See, they're starting to pull, maybe. Questions while they're pulling, so they're opening the door. That's the thing with order flow. It's the banana peel effect. Ben, hi, Ben. I'm going to roll over, end of business Friday. So I'll be trading the September contract effective Monday. Thanks for asking. So the IBF is over. Well, it hasn't taken out the IB, but I kind of think it will because there's stops up there. It's the same concept. So the IB is not dead yet, but I think it's getting a little ripe. And why? Because we held the VWAP, we did not revert, and now this came up. Right here, when this jumps up, if it doesn't rotate down, as soon as it comes above here, then that trade should be over. The other part of this is you could take a long here, but you might only come up here. So there's nothing, I don't have a, well, in the trader, let's say that we don't have a structured trade right here. I'm not saying you couldn't get long here because of this VPOC migration break high. So the possibility is pull back here, hold it in this volume, and push off, or just keep going. Stops are here. So there's really nothing here. We took out this volume. So you have microstructure here, which was too high. You're above it, says going north. Next level, here. We'll see what it does. HVN. So these are high volume. These act like VPOCs. So that's high volume. And we left it. So the nature is to come back and check it. This is high volume. Down here, high volume. If it's too low and we shift up, that means, again, too low. This is retail. If I break down, I need to come back here. If I do the opposite, now this is too low, and we're going to potentially squeeze to another high volume area. And the stops are sitting here. So we have to watch. Now, for some traders, they might, now this is another IBF right here, except that's the target. This. I would not be taking this short. And because there's no range, and it's also, there's stops sitting above this swing. So this to me is a high risk trade. So I would not take this now that it's back here. And the other part of this is, if this was down here, different conversation. With this up here, this is because you need, the IBF is a mean reversion trade. This is the mean in this fractal or time frame. So the best I got here structurally is to come here to get risk neutral. And then it would be this and this again for targeting. But I can't take a mean reversion trade when this is the mean. So if anything, it's a potential long, and it's not a recommendation. So we'll look at this right here. Let's look at it. Too low, micro volume here, break high. This is the mean, and this is the micro mean. So the volume is here, buyers, pullback. All this is an alignment for potential long, and it's not a recommendation. It can do anything, of course. This is your IB. So theoretically, here to there. Theoretically, here to north. Let's see what it does. Is this logical? Now, I cannot predict anything. What I understand and what the auction is about, and you can understand, is the potential. Then you have to understand market mechanics. We did not get here, which was the primary target. If this, IBF, then that, then that. If not, then what? Then back here. This shifts up, saying that's too low. If this is too low and this shifts higher, then what? If this is the retail and I push above and I pull back, so if this, then that, then what? Then long. If not, and I come under here, then what? Then back here. That's what I know. This is a long. Now, not a recommendation. Where am I looking to go? Into this. Take the stops. And where am I trying to go in that higher time frame? First, I think it was first. Might be wrong. Yes, first. Looking for the long at open as well. I thought maybe to test if overnight low and I'd be back. Um, well, see money. The idea I was looking for longs, not as my first trade, but for the overall to get long. I looked in the market. Here's something that everybody might want to put in their trade plan. What's the condition of the market? Where's the weak side? The buyers were the weak hands because of the double bottom from yesterday. Stops are under there. Now we can have a long bias in the higher time frame, but the market goes up to go down. So yesterday the market went up. Today to go down, to go back up. And it works on the fuel that's created by the stops on both sides of the market. And it doesn't have to do this. But the first trades that set up this morning were the shorts, not the long. So I'm looking for a long and I get a short. What am I going to do? Well, I can't get long. I've got to wait for a long. Where's my long? I didn't get one. And then I see the energy of the selling. It's impulsive at the time. So I can't take a long. So at that point is okay. Because you get short and then you manage your trade. And as you're short, you're seeing the velocity and the stops coming out. So that says, okay, where's my stops? Well, yesterday's low. That's a good target, even though we want to be long. Because if I get the longs out and I want to be a long, I want the sell stops out because that's going to help me when I get repositioned long for the squeeze. Now I have to have a place to get long, and if I don't, I don't. You know, and if it's a very fast move, I may not have any way to get into it. And other than how I feel emotionally about it, which of course is a lunatic running around who, FOMO, all the stuff that's triggered, right? Our attachment. Oh, I shoulda. Yeah, right. I should buy the low of the day. If I ever do that, I'll let you know. I certainly know I've sold the low of the day. I don't think I've ever bought the low of the day. I may probably have, or close, But the point of it is, it's the setups, the edge, and waiting. So this is a trade. This is a long in the TraderLab if it's part of your plan. And you need to understand why. What is this? This is a structured trade right here. Now it can just rotate. Remember, all trades can just do what? Fail. That's the way it goes. So this, and the reason it's a long was this was the first thing, but we didn't know until this shifted up. I saw the buying, and this was all fine until this. Then I see the buyers and the sellers are here, right? You could see absorption. I'm banging against this thing, and either we're going to, remember I said it's going to do this or break high. Once it breaks high, pulls back and tests. The buyers are in control here. The sellers got stuffed right here. This, and the sellers here. My stop goes under here. This is my entry. I think that's pretty sweet from a risk management point of view. And now I got to clear this HVN, and I'm looking for north. That's the long. So we had the short up for the IBF, which was wherever it was, either here or here. This target for the short, looking for lower to here. Actually, it wasn't, and maybe under here because it was the mid. Fails to get down under here. VPOC shift, break high, pull back, long, TraderLab structured trade. That's it. Helmet. Is everybody tracking? Are you guys in YouTube? I just want to make sure you're getting something out of this. This is trading, How are we doing in YouTube? Now, the thing, who was it? Jamie, you were talking about taking the IBF. I hope I explained why I would have a problem with the IBF. I could take it, but there's a couple pieces here. This is my first target, so this is my range, which is not terrible. I mean, but you got to enter really well. If you're entering down in here, this is your obstacle. You got to scale here for this reason, right? And we don't know. I mean, this is where this would be the ideal target. But you must and it's all in the TraderLab in those 60 PDFs of structured trades. You would know this is the scale because it's structured, so we know the structure. And now if this was here and the VWAP or the mid was below, this would be your scale because it's a mean reversion trade. I take them sequentially. So wherever I anticipate retail or other traders may interact, I have to be scaling ahead of their interaction. So it would be right ahead here. Then right here, if it holds the IB, then continuation down. This throws, as they say, a wrench into the deal. This is now a long. This is resistance. So if I get long, I got to be scaling here. So let's watch the behavior, okay? Because this is the mean. So if this is too high in a microstructure, I can come back here. And now if I come all the way back through, it can do that. And then I'm going to, get taken out of the long, scratch, stop is under here or here because I don't have a lot of range, get taken out, and then look for the stops. If I come under here again, then it's back to here, outside, and then we got to see. None of these are recommendations. This is just part of the joy and the randomness of trading. It's just what it is. No secret sauce, unfortunately. So this is important. This is important. Let's see what it does. It's very rotational. See, the thing with the IB is there's stops at the IB. So we can pick the stops and rotate. So this is just a tough condition here. So, so the short to here, the long to there, and then either we get through this and continue, or we fall under this and now we get back and take these guys out and come back to what we were trying to do from up here. So that's just the nature of the beast. We'll see what it does. Notice right here, this little node sticking out. This is high volume in the microstructure. These buyers are stuck now. Sellers took over here. So that little high volume, which is aligned with a higher time frame developing volume, which is why we marked this is too high in the microstructure. This is too high in the next fractal higher. You see? So I'm putting all these pieces together. This is retail in the developing time frame here. So the market finds too high, it can come across and rotate. If this now is potentially too low and we hold this volume where the sellers got stuck and the buyers came in, seller got stuck there. So this is your support. This and this. There's stops under here, not unreasonable to pick this. Then if it picks this, then it can come back here. That's what I know. I don't know what it'll do. So that's why you follow a trade plan. You want to get risk neutral. You put your stop, you at scratch or lock in a burger if you need to, and then it's just random. So over time, yeah, and this is another reason why you need range. Because if you don't have range, you got to get risk neutral, job number one. Guys, it's not about trading in the sense of action, action, feeding the dopamine and all that stuff. It's not about that or the adrenaline. It's really about just waiting for your trade and then you put the trade on and the outcome is random. It's just like the way the casinos play. The outcome of any hand is random. It's only playing games with an edge, and you got to define where your edge is. Range is part of the edge, because even if a trade works, if it does, the auction is generic. It'll do whatever it does, but you need the range to fit. So the auction has a generic behavior. So this kind of behavior happens. What the thing about it is, it's the range that determines whether or not it's qualified, you see. So that's another part. That's what the trade plan is. So you'll see trades that are structured trades that don't fit the qualification, so you don't take them, So I know, for me, if I can get out above this and this, then I'm still going for the higher time frame targeting. In the meantime, I'm just hanging out. I have nothing else I can do with this. That's it. That's trading. So you just put your trade on, you put your helmet on. You want to get risk neutral. You absolutely must get risk neutral. If you use in the TraderLab, you would know this is resistance. It's right there. So it's all right there. So if you got this long is a structured trade, you have to get, and we know there's stop. Remember, stop. Where are the stops? IB high. So that's why you could not, or I could not say, take this again. No bueno. If you listen to the stream, and these are available exclusively to TraderLab participants, you'll hear all these. I cannot take this. Weak structure now. Where's the stops? Above here. Where's my resistance? It's there. So if I take the long into the stops, this is resistance above the stops. I have to scale here ahead of this. Then I hold. And if I pull back and clear or just keep going, that's all fine. If not, and now I'm back in here, I'm back in another IBF, I can potentially do the same thing we were talking about earlier. But I can't get short because I have no range. So for me, it's a long to there, helmet. If it comes back across, it'll take me out. No problem. It's just one trade. And then down to here, and then I'm back on the long I was talking about earlier, back to here. So what this is mean reversion. We don't know. It kept going. Come back in. That's the mean. Now what? The longs are under here, and under here, and back here. So I'm going to be looking for, if it holds this, that's wonderful. Off we go. What do I know? Lunchtime stops, and we have an auction, I don't know if it's a 10-year note, or a 5-year note auction, right? Nick, I don't trade in with the shoehorn because the range. My thing is, the most important job of a trader is to manage risk. In a career in trading, there's thousands and thousands, thousands of trades. So it's not about action. It's what puts the odds on my side. Getting risk neutral is the most important element for me. Everything else, it's all random. So I look at where might I anticipate the other side coming in. Well, I know this, the VWAP over here, was where the other side might come in, because that's fine, So I have to scale in front of it. If I get the IBF over here, this is the mean. IBF is a counter trend because the trend is up, mean reversion trade. There's the mean. I can't sell this to go there. That's why I can't do it. I also know this was my long, and this is where my stops are. So if I get long here, I got to scale there, and then my stop is under here. And then if I get taken out, the trade's over. And if I don't get taken out, I'm hanging out because I am trying to go there and higher. 70% probability, past performance not indicative of results, I'm going here. That's why no short for me, unless, and that doesn't matter what I do. These are structured trades. The beauty of TraderLab is you could do anything, all and any, whatever, there's nothing wrong with the short, except for me, I want to be long because I'm operating in multiple time frames. If I'm trading just this is okay. And then I'm looking for this and maybe further out. Nothing wrong with it. But I wanted to use this to get long, and I didn't get that. I wanted this. Once this shifts, it changes everything, and now I'm using this for my long entry. You see? And my scale was there. So I'm sitting in the long. My stop has to stay under here, not here, because this is balance. Coming from here to here is mean reversion. So this is a mean reversion microstructure to a mean reversion developing structure. I know it's nutty. Short to long to back. This is a long, though. So this is the long to here. I'm sitting risk neutral, stop is under here. Why would I put my stop here? Because this is where the sellers ran out of gas, the buyers took over, and this seller here who absorbed these guys got run over. Pullback. There's a seller. Is he getting anywhere? Buyers. Pull back. Sellers try again. It's like an attack. Stuffed. Thanks for playing. We're going to send you a coupon to the buffet at the casino. And that's basically the trade. Now, it can fail. It's got to clear this micro high volume right there, HVN. And HVN is the same as this, except it's fractal. This is a micro time frame, that little thing. Yet, that's where it was too high. And we ran out of buyers above there. And it's at resistance. That's why I put the line on here. If I can't clear this, then, so I have, what do I have? Too low, retail, break high, so resistance, too high, pull back, retail, seller trapped, clear this, and then we're, on the road to Marrakesh or naked VPOC or not. Can you guys see the logic of the narration? And nobody can predict. What we can do is, if we understand how the market works, and one of the ways to think of auction market theory and using volume profile is language. I don't use any indicators. My indicator is volume, because when there's behavior, I can interpret it. And then I don't know what'll happen, but I know what it means. So I know I got to clear this, and I know if I fall under here, I can take these guys out, which would be me if I was holding my long, and these guys, and then come out. And if I come out, I'm looking, unless it falls apart, I'd be looking to get long to come back here and still go here, unless, of course, it all breaks. Final questions. And please give a thumb up in YouTube. And if you're interested in TraderLab, it's a great community. There's no cost. There's a link in the bottom of YouTube. VPOC migration. What is this telling me? More volume is here than here than here. We want to see the behavior right here. Does it push off? Or watch. Just watch the behavior. There's a link in the bottom of YouTube. You can access the Bookmap Discord TraderLab community. There's no cost. There's 60 PDFs of these structured trades that you can download, reverse engineer, make them your own. Come to the community. It's a terrific community of serious traders. It's not romper room. It's about building the business of trading, learning how the market works, why it does what it does, and how you might get in alignment with it at times using structured, vetted trades that you can reverse engineer and see if it has a statistical edge. You can apply this process to any market, any time frame. It's all generic. This is the basis of how markets work. And then you use a high-tier order flow tool like Bookmap to see inside, and it helps you understand what might be going on. What's happening with the delta? What about the absorption, the icebergs? What about all this behavior? Can you codify it and isolate it? That only interact when the statistics or the odds are in your favor, and accept, just like the casinos do, that the outcome is random, but only play games that have a statistical edge. That's the business of trading, and that's what we do in TraderLab. Thanks for visiting in YouTube. Please click the like button on the way out. Remember, if you're in the Bookmap Discord TraderLab chat, not only are these streams available exclusively for you to review, reverse engineer, but the library of webinars and all the resources are also available. And that's available too. If you're visiting in YouTube, there is a link down there. There's no cost for all of these, and to be part of a community. Thanks again for visiting today, guys. Sorry about the technical difficulties. I know a lot of us had them this morning with the data, and I look forward to seeing you soon. Please give a thumb up on the way out. Thanks again. Let's take a look, by the way, real quick on what's going on here. Too low, VWAP, VPOC, flush. Oh, this is the auction. Okay, guys. Remember I mentioned there was an auction at 12 noon. You would have got taken out of this trade. And if with the auction, nothing you could do about that, that's a report. So now let's watch. And I'm going over, so I can't stay on here with you guys. Watch this here and watch this here. Right here, watch this. This operates the same as this in a fractal. This is a potential long, not a recommendation. For all the reasons you already know. Not a trade recommendation. You guys can watch it. There's the auction. Here's the pullback. Let's look over here. See it? If this is too high, then we get a report. It's a disruptor. Takes you out. Breaks high. Pulls back. You have a potential long, and you're going for here. Hope you saw that. Hope you see how I use fractals. Thanks again, guys. And I hope you got something out of this. Thumb up in YouTube, please, on the way out. Appreciate it. I just had to jump in here and point it out to you. And don't forget to click the link in the bottom of YouTube if you're interested in accessing the resources in the Bookmap TraderLab chat, and give a thumb on the way out.